Ladies and gentlemen, good day and welcome to Tech Pipes Limited Q3FY22 earnings conference call hosted by Ambit Capital. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I would now like to hand the conference over to Mr. Dhruv Jain from Ambit Capital. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone. Welcome to Tech Pipes Limited's Q3FY22 earnings call. We have with us Mr. Anish Bansal, Executive Director, and Mr. Arvind Bansal, the CFO of the company, today with us to discuss the Q3FY22 earnings call. Thank you, and over to you, sir, for your opening remarks.
Good afternoon and welcome everyone for our Q3 FY22 earnings conference call. In the third wave of COVID pandemic, hope you and your families are safe and healthy. I'm joined on the call by Mr. Arvind Bansal, CFO of the company. I hope everyone has had a chance to go through our results and updated investor presentation uploaded on the exchange. We are delighted to report double-digit net profitability in Q3 FY22 continuously for second quarter in a row. EBITDA per ton of rupees 3,852 rupees in Q3 FY22, growing sequentially quarter after quarter. Proportion of value-added products has increased to 25% in Q3 FY22. It is continuously growing quarter after quarter. In the reported quarter, volume has decreased by 20%. Primary reason for decrease in volume is the extended monsoon period in the months of October and November and wider price gap between primary steel and secondary steel, due to which distributors and dealers had started destocking. Sales realization has improved considerably year-on-year basis, primarily led by increase in price of steel products and higher sale of value-added products. Though the raw material prices have increased on YoY basis, we have been able to improve our operational efficiencies, which has benefited us in margin improvement. I am happy to share two major developments in the company. Firstly, the production of pre-galvanized tubes and pipes at Khopoli plant. The company has started commercial production of pre-galvanized pipes for Maharashtra and Goa markets at Khopoli unit. Maharashtra and Goa markets are enjoying second highest market share in GP pipes on all India basis. The company is having backward integration for raw material of GP pipes, that is GP coils, which is manufactured at Secunderabad facility. Quality and service of GP pipes is very well accepted in the market. Secondly, production of galvanized corrugated roofing sheets at Secunderabad facility. The company has started commercial production of galvanized corrugated roofing sheets at its Secunderabad manufacturing facility, primarily for northern markets. The company is having backward integration for raw material of GC sheets. Quality and service of GC sheets are very well accepted in the market. The company is further increasing the capacity of GC sheets by adding new lines for thinner gauge sheets. The company is committed and focused to optimally improve capacity utilization of our existing plants, and at the same time, we have a clear vision to reach 1 million tons capacity from the current level of 5.8 lakh tons. The current quarter, Q4, has started with a big bang. Steel prices have more or less stabilized. Price gap between primary and secondary steel has narrowed down substantially, which has come down to the previous levels. And the construction activity is going on full swing across the country. Though the country is passing through the third wave of COVID, however, we hope it will not impact industrial and construction activity in the country. With robust demand, we are very optimistic that this financial year will set a good foundation for years to come. I will now hand over the call to Mr. Arvind Bansal, our CFO, to take you through the financial results for the quarter ended December 31st, 2021.
Good afternoon, everyone. I will take you through the financial results of Q3 FY22. Our revenue from operations for the quarter grew by 6% year-on-year basis to rupees 440 crore rupees. as against rupees 416 crore rupees in corresponding quarter. The revenue growth was primarily driven by significant increase in our sales volume of value-added products and higher realizations. Sale realizations has improved by 40% to rupees 67,600 rupees per ton as compared to rupees 48,100 rupees per ton in corresponding quarter. Our EBITDA for the quarter increased by 8% year-on-year basis to rupees 25.08 crore as against rupees 23.22 crore rupees in corresponding quarter. EBITDA per ton for the quarter stood at rupees 3,853 rupees per ton as against 2,800 rupees per ton, which is an increase of 37% on year-on-year basis. The increase in EBITDA per ton was primarily because of increase in sales realizations, increase in share of our value-added products, improvement in operational efficiencies, and reduction in fixed cost on per ton basis. Our profit after tax increased significantly and stood at rupees 10.17 crore as against 9.26 crore rupees in corresponding quarter. With this, I would like to open the floor for questions. Thank you.
Thank you very much. Ladies and gentlemen, we will now begin the question answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. A reminder to the participants, if you wish to ask a question, please press star then one on your touchtone telephone. Mr. Ritesh Shah, you may please go ahead with your question, sir.
Yes, thank you for the opportunity. Sir, I had a question. How should one look at the company's value addition, if you can help it, percentage and volume terms, and are there any new launches that we are looking at over next 18 to 24 months? That's the first question.
Mr. Ritesh?
Yes, sir.
The volume of our value-added products, actually, if you see, it is increasing quarter after quarter. In last financial year, proportion of our value-added product is around 15%. In quarter one, it was around 22%. In quarter two, it was around 23%, and now it has increased to 25%. Actually, value-added products earlier, there were galvanized pipe and metal beam crash guard. But now we have added galvanized roofing sheet, and we have started production of GP pipes at our Khopoli facility also. And we have started production of wider core coils and strips also, which has really given good margins to the company. And in quarter four, or in the beginning of quarter one of FY23, we are going to start color-coded roofing sheets, which is going to further add in the kitty of our value-added products.
Sure, sir. And sir, how should one look at this number of 25% going forward, given we have several new launches planned? If one had to look at it on a volumetric terms, how should one look at this number?
Actually, we have the vision to reach to around 30 to 35% by FY23.
Okay. And sir, how much will be the margin differential between when we say value-added versus the normal product that we sell?
Margin differential is more than 1,000 rupees per ton. EBITDA per ton, in terms of EBITDA per ton.
an EBITDA per ton, it will be more than 1,000 rupees per ton. That's useful. And sir, second, pardon me for my ignorance, is sir, how are we managing the volatility in the raw material prices? Given we understand, I think steel prices have again moved up earlier this week. So is it like a price contract or a volume contract? What sort of MOUs do we have with the steel companies to mitigate the inventory risk? And anything on working capital that we are doing incrementally to actually flatten this out?
Actually, regarding this price volatility, the good thing in our industry is that whatever price increase is there or sometimes decrease is there, it is well known in the market. The mindset of our distributors and dealers is said that there is going to increase will happen or decrease will happen. So we are able to pass on the increase or decrease in the market within, say, a span of around 7 to 10 days itself. In quarter 2 and quarter 3, there was a steep increase in the raw material prices, which has really impacted the market of organized players. Reason being the gap between primary steel and secondary steel. Secondary steel, we call it as a patra steel, manufactured by this Mandi, Govindgarh manufacturers or Raipur manufacturers. Earlier, the difference used to be in the range of 5 to 6 rupees. But due to steep increase in the primary steel prices, this gap has widened to around 20 rupees per ton, due to which the demand of organized players has been temporarily shifted to unorganized players. That was a temporary phenomenon, but with God's grace and with market, now this gap has narrowed down significantly. And now the gap is more or less at the previous levels. And the good thing is that now the steel prices, the primary steel prices has also stabilized. Only some minor corrections might be there. Not major corrections, which doesn't seem it is going to happen, at least in near terms.
Right. Sir, so my question was, do we get into back-to-back contracts? Like, do we have price and volume commitment both when we procure material from the steel mill?
Yes. Actually, we have annual MOU with the steel producers, like this MLS is there, or Tata is there, or Steel Authority is there. We have the volume contracts with them, annual volume contracts. But prices are decided on monthly basis.
Sure. And sir, what is the sort of inventory that we keep at the plant for finished goods as well as raw materials in number of days?
Total inventory we are keeping around 40 to 45 days.
Okay. And is this a number that we are comfortable with even going forward, or is there scope for reducing this?
You know, earlier it was around 50 days, and before that it was around 55 days. So, this inventory days are reducing year after year, and we are expecting in the times to come it is going to further decrease.
Sure. And sir, last question, was there an element of inventory gain basically in this quarter?
Some inventory gain, minor inventory gain was there in quarter 3. But actually that gain was there in the month of October, November, and that has been mitigated by decrease in the price in the month of December. So only some token gain was there.
Sure, sir. That's very useful, sir. Thank you so much, and wish you good luck. Thank you.
Thank you. Thank you.
Thank you. The next question is from the line of Bhavin from Investec Capital. Please go ahead.
My questions got answered. Thanks.
Thank you. Thank you. The next question is from the line of Dharma Venkateshan, individual investor. Please go ahead.
Am I audible now?
Yes.
Yeah. So, good afternoon. Thank you for the opportunity, and congratulations on doing a very good set of numbers in these difficult times. My question is that what is the capex plans the company has in the future? Because when I went through the annual report, the company targets has a capacity target for financial year 2024. So, what are the further capex plans the company have in pipeline?
Ms. Dharma, actually, we have the clear vision to achieve our capacity to a level of 1 million ton. But at the same time, we have the focus to achieve our existing capacity. Our existing capacity is 5.8 lakh ton, but at present our utilization is in the range of 45%. So first we are focusing ourselves to utilize this capacity at least to the tune of say 60 to 65%. After reaching this utilization, then we will think of further expansion. Although we will keep on doing some minor addition and new product launches, but major capex we are not going to do.
So if my understanding is correct, if the capacity utilization reaches optimal level, then the management will decide on further capex. Correct?
Correct. That's correct.
Correct. And given our current capacity utilization is around 45%, so if the capacity utilization reaches optimal levels, is there any scope for increase in the margins because of the absorption of fixed costs?
Sorry, come again?
Sir, our current capacity utilization is around 45%. So if the capacity reaches around 70-75%, is there any scope for increase in the margins because of absorption of fixed costs?
Yes. It's a control process, and actually when volume increases, fixed costs automatically get reduced, and it is going to add in the margin.
So is there any visibility you can give on the margins, or like?
The visibility what we can give is if you see our EBITDA margins are increasing year after year and quarter to quarter, and in the times to come also it is going to further increase. But it is difficult to give any specific number.
Okay, sir, fine, that's fine. And our current debt levels is going to be reduced or kept at this level, or what is the plan for the debt?
Actually, all this debt level depends on the steel prices also. If steel prices remain same, hopefully there should not be any major increase in the debt level. It should be at the current level. But with the volume increases, we always need certain working capital. But in terms of operational efficiencies of debtors and inventory, in terms of number of days, it is going to be improved.
Okay, sir. Thank you. And one last question: is there what is the export market? Are we looking at it? Like, what is our way of moving forward, or only we are concentrating on domestic?
Yeah. Good afternoon, Mr. Dharma. Anish Bansal this side.
Yes, sir.
So exports, we are actively focused towards exports, but the current situation is such in which, the freights, the ocean freights have gone up significantly high, and there is a very, very acute shortage of the containers. So we hope, the ocean freights to stabilize in coming quarters, and we'll move towards exports. Currently, the company has done exports to the tune of 10%.
Okay, sir. Fine. Got it. And just a confirmation, our value-added products share, our target for financial year 23 is around 30 to 35%.
Correct. That is correct.
Okay, sir. Thank you. Thank you for the opportunity.
Thank you. The next question is from the line of Akshay Chera from Canara Robeco. Please go ahead.
Yeah, so one first question would be, sir, you did mention that one of the new value-added products that we'll be launching would be the color-coated roofing sheets. So wanted to understand, what is the value addition in that, and what is the EBITDA per ton that you look at in this product?
Yeah, good afternoon, Akshay. Anish Bansal this side. The color-coated, we launched this product in the first quarter of FY23. The EBITDA margin in this product ranges from 5,000 to 6,000 rupees per ton on a blended average basis.
And so what is the value addition? I mean, besides coloring, do we do galvanizing, or why is so much different? Just wanted to understand.
Yes, before color coating, it is continuous galvanizing the processes, and before galvanizing, there is a cold rolling process. So it is a 3-stage process.
Okay, cold rolling, galvanizing, and then color coating. Okay. And so, which is the other product that you mentioned? Sorry, but I was not able to hear it clearly.
So that was the launch of pre-galvanized tubes from our Khopoli unit for Maharashtra and Goa markets.
Pre-galvanized tubes. And again, the same question: what would be the EBITDA per ton? I mean, from these products?
4,000 to 5,000 rupees per ton.
4,000. Okay. Yeah, so that were the few questions from my side, sir. Thank you so much.
You're welcome.
Thank you. The next question is from the line of Kamlesh Kotak from Asian Market Securities. Please go on.
Hello. Good afternoon, sir. Am I audible?
Yeah, you are, Mr. Kamlesh.
So just can you help us understand the volume breakup in terms of how much of the sales come through the OEM and contract business direct, and how much we sell from distributor channel?
So, Mr. Kamlesh, our B2C, that is our dealers, distributors, and retailers, this would constitute of 70% of our sales.
Okay.
And 30% comes from the B2B segment, which will include the corporates, the PSUs, the government bodies, OEMs, projects, and exports.
Okay. And would you have any classification how much of our product also goes? I think we also are supplying GI pipes to agri. So how much would be agri and infrastructure? Any ballpark estimates you share?
So yeah, in our tubular business, our proportion of GI tubes and pipes is about 25%, and the primary customer is the Jal Jeevan Mission, which is the central body scheme, and all the states they have to supply the potable drinking water through pipes, and this is our focus for the coming financial year as well.
So 25% of the total volume you said, right, is GI tube which goes into
25% of the tubular volume.
And as a percentage of the overall volume, how much percentage it would be?
Approximately 10%.
Okay. Fine. Secondly, sir, just I wanted to understand how much capex we have made at the Khopoli plant for this 80,000 capacity.
So we have made a capex of 30 to 35 crores for Khopoli unit.
For 80,000 units, right? 80,000 tons.
Yes.
Okay. And sir, last 2 quarters we have been seeing a decline in volume. So how you see the fourth quarter going to shape up? Is it also going to be a muted quarter as we speak?
Yeah, Ritesh, Q4, Q2 and Q3, we had a little challenge from the steel price hike and the difference, the gap between the secondary and primary players. But that has bridged down significantly, and Q4 we are hoping for at least a volume of 90,000 tons.
Okay. And you said that up to 65% of the utilization you are not going to have any major capex right now.
Yeah, some balancing would be there, but not a major capex.
Okay.
But the capex in the form of color coating, that will be there, and then some balancing will also be there.
Okay, so it will be in what range, sir? Annualized basis capex would be?
For FY23, it should the color coating capex has also been captured in the previous in H1 also, and in next FY23 we see a capex of 10 to 15 crores.
Okay. Right. Is it safe to assume that by FY24 we'll be achieving 65% of the utilization of the current capacity?
Yes, definitely.
Okay. And sir, what is the gross debt as of today?
About 300 crores.
Okay.
And out of this 200 crores, approximately 200 crores is towards working capital, and 100 crores is the long term.
200 is working capital, right?
Yeah.
Okay. Thanks. So, sir, just one observation. If we compare our company with the leader in that space and the kind of business they have evolved over the last 2-3 years, I think we also should rather focusing on the capacity utilization and improvement of the working capital from 60 plus days to sizable lower amount, and also improve the balance sheet with the lower of debt and the finance cost, and then only I think we should contemplate the next leg of expansion is what I would suggest as an observation we should now strive, isn't it, sir?
Yes, Kamlesh, and as you would see from the previous years, we are continuously improving on these two fronts, the total working capital cycle also, and the utilization also. The utilization, the new capacity 80,000 is fairly new, and it takes like a little bit of time to absorb these new capacity. So from Q4 onwards, we are fairly confident of doing a 65% utilization.
And then that also will mean that if we don't have any major capex,
yes.
So we will be able to reduce the debt also sizably from 300 crore now over the next 2-3 years. What could be the debt level?
Yes, in the relative terms, it should come down. But we'll be needing some more working capital also as with the increasing volume. So our focus is towards and we have brought down the debtor days from 45 to 30 days in last 3 years. So the focus is there towards the better efficiency of working capital.
Right. Because sir, as I was mentioning, the leader has already reached a cash and carry model of around 10 to 15 days of net working capital. We are already at 60 plus days still. There's a lot of scope for us to improve there, and I think if that plus the debt deleveraging happens, I think that can take care of our EBITDA as well as profitability before the next leg of capex goes, because we have enough of headroom to grow as far as the volume is concerned, right, sir?
Yes, Kamlesh, we are very well aware of this, and the leader is doing some dealer financing also. They are giving they are routing it through the other dealer finance channel. So I think once our dealer finance operates, we should we should bridge this gap significantly.
Sure. And lastly, sir, as far as the product comparative pricing goes, are we at par with the leader and the other companies, or how our product is sold? Is it at a discount or is it a parity? How it works?
More or less, our dealers, our retailers, they sell it more or less at the same price level. Very minimal gap.
Okay. Okay. Great, sir. That's it from my side. Thank you very much.
Right.
Thank you. The next question is from the line of Dhiral from PhillipCapital. Please go ahead.
Yeah, good afternoon, sir. Thanks for the opportunity. As I'm new to this company, pardon if my questions are basics in nature. So first of all, wanted to know what is the market opportunity size for the product that we manufacture?
Hello?
Hello?
Sorry, please come again.
So what is the overall market opportunity size for the products that we are manufacturing right now?
The market size of our industry is around 8 million tons for ERW pipes.
8 million tons?
8 million tons, yes.
Okay. So maybe we are a very minuscule player in this, right? Because our overall market this volume is just 580,000.
Yes, right. Right now it is, and we have the ample opportunity. We see it like this.
Okay. And so when you say that our value-added product contributes almost 25% of the current revenue, but so when I look at the overall EBITDA margin, so we have not seen any kind of an improvement in that over a period of time.
If you see our EBITDA, our increase in value-added products is well reflected in our EBITDA margins. If you see last year, our EBITDA margin was 2,600 rupees, and now in 9 months it is 3,700 rupees per ton on per ton basis. And in FY19,
but if I see overall EBITDA margin, it has remained between 5 to 6% only, sir.
Actually, in our industry, we always compare EBITDA in terms of EBITDA per ton, not in terms of percentage. Reason being,
okay,
suppose steel price is at 50 rupees, and it goes up to 70 rupees. In terms of percentage, it is going to come down. But our EBITDA in terms of say spread per unit per ton, that will increase.
Okay.
So that is the main thing for us. It's a commodity. Steel is a commodity, and there is always volatility in the steel prices. Sometimes there is a sharp decrease, or sometimes there is a sharp increase. That's why in our industry, not us, everybody do the analysis in terms of EBITDA per ton, not percentage.
Okay, got your point. And sir, you also spoke about because of these higher prices, market is shifting toward the unorganized player. So what is the current organized share and unorganized share?
Basically, that was a temporary phenomena, and that has happened in Q3. Now the price gap has came down to original levels, and hopefully now there's not going to be any major impact.
Okay, but sir, what is the current unorganized share?
Organized market share is at around 80%, and organized is 20%.
And so what was the price gap, which was there in Q3?
Actually, originally price gap used to be in the range of 5 to 6 rupees, and in Q3 the highest price gap was around 18 to 20 rupees.
Okay, so now again the spread has come down to 5 to 6 rupees.
Yes.
Okay. And sir, just last two questions, sir. So why our capacity utilization is very low at 45%? It is just that we have increased our capacity. That's why.
Because there are major two reasons. First one is our Khopoli facility has been started in Q4 only of FY21, and that is going to be increased gradually. Volume is going to increase gradually. Second thing is in Q3 there was a temporary shift from unorganized to organized player. From organized to unorganized players, which has impacted not our share, everybody's share. But hopefully in Q4 we are going to get a good volume.
Okay, so you just given the guidance of 90,000 metric ton, right, sir?
Correct. That's correct.
Okay. And sir, lastly, as you're targeting 35% value-added product by FY23 end, so what will be our targeted EBITDA % for that overall?
Sir, we have already mentioned that this EBITDA per ton is going to increase quarter after quarter, and it will be difficult for us to give any specific number, but it is going to be increased.
Okay, so this
Sir, I'm so sorry to interrupt. May I please request you to rejoin the queue for your follow-up, as we have people waiting for their turn?
Okay.
Thank you. The next question is from the line of Dhruv Jain from Ambit Capital. Please go ahead.
Thank you. So, sir, I had a question, and this is a continuation of something that you mentioned in this call. So, with respect to working capital days on the receivable side, and you mentioned that some of the industry peers are able to do channel financing. So, just wanted to understand that when can we start channel financing, or what are the hindrances And the other one was on inventory days, and we've seen that, there has been a declining trend in inventory days. So, furthermore, what are the kind of initiatives or, things that you are doing on the inventory side to reduce this going forward?
Yeah, hi, Dhruv. So, firstly, regarding the dealer financing, we are, actively, trying to get the same arrangement with our distributors and dealers. And I think in next financial year, we'll be very close to, sign it off. And secondly, regarding the inventory levels, as you have seen, it has come down. And, we still see, there is a scope of another 5-7 days more to shrink the inventory days. So we are focused on this, and maybe next financial year we'll bring down this further.
So directionally, if we have to think about working capital reducing going forward, what is the kind of target that you are setting for yourself in terms of days, working capital reduction in terms of days, over the next 2 or 3 years?
So we'll our benchmark is what the market leader is doing. So gradually and steadily, it's a process. So and we are very conscious of this fact, and I think another 3 to 4 years we'll manage to be in the same range.
Okay, thank you.
Thank you.
Mr. Jain, does that answer your question?
Yes, thanks.
Thank you. We take the next question from the line of Amruta Dahekar from Wealth Managers. Please go ahead.
Thank you for this opportunity. I wanted to know regarding the galvanized color-coated roofing sheets, what is the kind of capacity that we are coming up? That's my first question. And my second question is regarding the debottlenecking, which you had spoken of in the presentation. So, what is the timeline for completing that debottlenecking from 5.8 to 7 billion tons, right?
Yeah, hi, Amrita. So the color-coated roofing sheets, this capacity is about 50,000 tons. But our overall capacity will be at 580,000 tons only. It's a value-add product. So the total capacity will remain at 580,000 tons, but this 50,000 tons will be a value-add product.
So, in the current capacity of 580,000 tons, what is the proportion of value-add capacity that we have?
Out of 580,000 tons, we have the value-add capacity is around 220,000 tons.
Sorry, 2 lakh?
220,000 tons.
Okay. And what is the timeline for the debottlenecking of the capacity?
So the debottlenecking will take place in FY23 partly and partly FY24. And this debottlenecking is going to take place in all the plants, and we are looking forward for a 10-20% increase in every plant.
Okay. And what is the kind of capex spend that we have to do for this debottlenecking?
In total, it should be around 15 to 20 crores.
Thank you.
Amrita, total will be 15 to 20 crores.
All right. Thank you. That's all my questions.
Thank you.
Thank you.
The next question is from the line of Akshay Chheda from Canara Robeco. Please go ahead.
Yeah. So thank you for the follow-up. So 2 questions from my side. So first question is that you did mention that this quarter, January, you have started on a strong note because of the construction activities, etc., resuming. So you expect a good quarter for good Q4. But if I have to ask you, if you can give some guidance, how do you look at the volume numbers or volume growth, say, for FY23, FY24? So if you can give some number there, that would be helpful.
So, Q4, we are targeting a volume of 90,000 tons.
Okay.
And in FY23, we are targeting capacity utilization and average capacity utilization of 65%.
65%.
Yeah. Approximately 380,000 tons.
So that would be a growth of what, around 10-15% YOY?
More than 20%.
Okay, more than 20%. Okay. And sir, second question would be, sir, if you see that the market leader is talking a lot about, say, building a hospital out of the tubes, etc. I mean, a pre-engineered structure. So they are even talking about buildings that are being made out of the steel tubes. So, sir, how do you see this area of business? I mean, of course, with the current capacity, I understand that you might not be having the capacity to produce this type of steel tubes that are needed for that. But overall, I mean, you might have done some assessment. So how do you see the structural, I mean, that area of the business? I mean, if you can comment there, that would be helpful.
Yeah, Akshay, our production rates are fungible. We in fact we are making these products and we are supplying to the warehousing segment, wherein all the tubular structures are being used for putting up the warehouses and sheds. So we are already present in this segment, and as the market goes, because right now it is a very nascent stage. So as the market goes, we are equipped and geared up to meet this demand.
Okay. And sir, on the high story buildings, like, is it possible? I mean, how do you see that? I mean, the feasibility of, say, building a 5-story, 6-story building out of this. Does it give the same?
And as you would have seen in our annual report presentation, we have featured one project in Noida. This was a 4-star hotel.
Okay.
And the entire hotel is made from jumbo steel tubes and pipes, which is our offering. And we have supplied more than 500 to 600 tons for this project. And this entire G+8 has been built on the hollow sections itself.
So then how do you see the acceptability of these, I mean, pre-engineered buildings, or how do you see this business shaping up? And do we as a company have to put in some more efforts like in convincing people, or over a period of time you see that the acceptability of these products would increase? Yeah, that would be the last question. Thank you.
So Akshay, I think for our industry this is going to be the game changer in times to come. And as we have seen in the West and the other developing nations, this is a standard norm of construction.
Okay.
So this will open a huge opportunity for our industry.
Understood, sir. Okay. Thank you, sir. This was very helpful, sir. Thank you.
Thank you so much.
Thank you. Before we take the next question, a reminder to the participants, if you wish to ask a question, please press star then 1. The next question is from the line of Sarvi Sharma, individual investor. Please go ahead.
Good afternoon, sir. My question is related to the branding of GC and color-coated sheets as you are manufacturing these new products. What the company is really doing about branding of these GC color-coated sheets, and is the management thinking about engaging any brand ambassador for that?
Yeah, hi Surbi. Very good question. The company, is, because it's a B2C product, and we have identified, certain marketing and branding strategies and activities. And we have, invoked a good professional team for this. And, starting from this quarter, they will start, on this. In our northern markets, the branding activities in the northern markets like UP, Rajasthan, Uttarakhand, J&K, Haryana, Punjab. So these territories they will be covering in Q4. And as the production increases and as the supplies increase, we will go down to the further stage. Regarding brand ambassadors, it is definitely on cards, but we'll take a call in times to come.
Okay, that's fine, sir. Thank you. That is all I wanted to know. Wish you good.
Thank you.
Thank you.
Thank you. Before we take the next question, a reminder to the participants, if you wish to ask a question, please press star then 1. The next question is from the line of Dharma Venkatesan, an individual investor. Please go ahead.
Thank you for the follow-up. Sir, just a small question. Like, what is our financing cost in terms of percentage for our debt? Is the number available?
Yeah, Mr. Dharma. So right now our blended is between 8.5 to 8.75%.
Okay, sir. And one small suggestion, sir. Like in the investor presentation, like, is it possible to give the breakdown of volumes between products? It will be helpful for us.
Yeah, definitely. We'll make this change from the current quarter onwards.
Oh, okay, sir. Thank you very much, sir.
Thank you. The next question is from the line of Dheeraj Kumar, an individual investor. Please go ahead.
Good afternoon, Mr. Bansal. First of all, congratulations for the wonderful set of numbers. My question is that how much the company or the management is focusing on the R&D activities, like towards product innovation or to improve the current products as per the market feedback? Does he have hired any agency for this, or we have doing this in-house?
Dheeraj?
Yeah, am I audible, sir?
Yes, you are audible.
Yeah.
Actually, if you have seen, we are keep on introducing new products in the market. Like we have introduced galvanized roofing sheets, GP pipes, our jumbo steel pipes for steel engineering buildings, and in times to come also we are going to introduce new products. As our director has mentioned, we are going to start color-coated roofing sheets in first quarter of next financial year. And we keep on introducing such products. We have a marketing team with us, which is exploring the market requirements. We are meeting with architects and engineers also. And we definitely, our team is working on the subject.
Okay. So thank you, Mr. Bansal. Thank you for the input.
Thank you.
Thank you. The next question is from the line of Akshay Jeda from Canara Robeco. Please go ahead.
Yeah, so you did mention about the branding activities. So just wanted to understand, like, how much, I mean, say for example, if we as a high-tech, if we make a brand, like we do a lot of promotional activities, etc., then what is the brand premium that we can enjoy, say, if we have to compare it to, say, unorganized player or like-to-like player? Say, of course, we can't compare it to the market leader because of the, I mean, is it possible that we can command the same market premium that a market leader is doing if we do that? And what would be that percentage?
Actually, all this branding is a continuous process. It is not going to happen in a single day.
Okay. Yeah.
Branding means basically a trust of customers, and trust of customers can't be won in a single day. And definitely, as our branding improves, as the trust of customer improves, we are going to command prices also in the market, better prices in the market, better demand, and priority over our peers product.
So what would be that number if you can quantify it? I mean, so 1%.
Everything can't be quantified in terms of numbers. It's a continuous process. And as this process goes on, you can see the translation of all these things in our numbers, of quarter numbers. But if you want quantification, practically it is not possible.
Okay, understood. Okay, thank you.
Thank you.
Thank you. A reminder to the participants, if you wish to ask a question, please press star then one on your touchtone telephone. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference back to the management for closing comments. Members of the management, you may please go ahead with your closing remarks.
I take this opportunity to thank everyone for joining on the call. I hope we have been able to address all your queries. For any further information and guidance, kindly get in touch with us. Thank you so much and have a good and healthy day.
Thank you very much. On behalf of Ambit Capital, that concludes this conference. Thank you all for joining. You may now disconnect your